Good morning. It's Tuesday, June 17th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at the overnight price action here in the U.S. equity markets, stock futures are down following Trump's call to evacuate Tehran shortly after his G7 visit. Traders are apparently, though, unfazed by these measures here, with futures staying well above last week's lows, which occurred when the conflict between Israel and Iran began. So the level that you want to watch here on the S&P 500 is 59.79. That was the low on Friday, June 13th. So I would circle that on the chart, draw a little line there, because if you do get a breakdown in any kind of holding basis where we stay below that level, say for some arbitrary period of time, 15 minutes, an hour, whatever, chances are market could be breaking a bit lower. So I'll want to keep an eye on that level. Today, we will have some economic data come out. Retail sales for May, very important because of the fact you want to see how the consumer has been holding up with regards to the tariffs and things like that. Also, you're going to have import-export prices for May. Those are all due out at 7:30 a.m. Central Time, followed by industrial production at 8:15. We'll want to see if the industrial production news has any kind of impact on any of the metals at all, base metals, copper, things like that, aluminum. So I always keep an eye on that when that particular number comes out, because it used to be a market mover back in the day. Tomorrow we'll have the FOMC statement, the press conference, and then Thursday we'll have a bank holiday. Now, a couple of the reports that I was reading last night here, one of the strategy reports, Bank of America, their survey showed that investor sentiment is back to Goldilocks type phase here, and oftentimes we're getting back into that greed type of mentality. So the most crowded trades, according to the report, are gold at 41%, long the Magnificent 7 at 23%, and short US dollar. So want to keep an eye on those if there's any kind of trend changes that occur. Now, Citigroup also did come out with a forecast here in a report, and I haven't located this report, but it'll be sent to me pretty soon here. They're forecasting that gold will fall below $3,000 an ounce on weaker investment demand and improving global growth forecasts and Fed interest rate cuts. So that's very counterintuitive as to what's going on right now, because we've got quite a bit of investor demand shown by the Bank of America report, and then we do have the improving growth forecasts here. There are expectations for Fed cuts, but I really believe that the Fed is in a wait-and-see type mentality. Now, there was also a survey, a central bank survey on the gold market, where it shows a record 43% of central banks plan to increase their gold reserves over the next 12 months, drawn by gold's performance during crisis and protection against inflation. And if you look at some of the longer-dated forecasts, our upside target on the gold market here, $3,600, followed by $4,000 into next year. Central banks have been net buyers for gold for about 15 years, with a pace of buying over 1,000 tons a year for the past 3 years. It looks set to continue at this pace here throughout the rest of the year. The majority of central banks are citing gold's performance, again, during crisis, a portfolio diversifier, the store of value of holding gold, and emerging economies lack of political and default risk. So what those people are doing, some of these emerging market economies, is they're really starting to build those gold reserves. Also Bitcoin reserves as well. Now, if you look at the metals markets here overnight, you do have gold hovering, broke below the 3,400 level. If you look at the chart and get the chart pack, you're going to see that it had that extension upward on the fear trade on Friday, a little bit of a gap higher on Sunday night. Now the market has come back down and has tested that old resistance right around 3,400, and now we're bouncing here to about 3,414. The next area of resistance is going to be right around 3,341, and next major support level in the gold market below that 3,400 is going to be right around 3,376. I think below 3,346, you start to go back into that period of consolidation that you can see on the charts here as well. So a couple different strategies. You could come into the gold market with a tight stop, in my opinion, and then look to re-enter back in the consolidation area. Not a specific recommendation out to the public, just a thought, and one of the thoughts that I'm having here on how to approach and how to attack that market, given the technicals here and given some of the wide variables as far as analysts' expectations, supply, demand, and rotation into different commodities and such. So if you look at the silver front, silver is up about 1.7%. There's a few things going on with the silver market at the moment. One, it was able to shrug off this Senate Republicans proposing a tax plan to end tax credits on wind and solar earlier than expected with other sources of power, and that's sending the solar stocks in the pre-market trading. So one of the stocks that I always look at on the solar front is TAN. It's the Invesco solar ETF, down about 6% pre-market trading. Solar does play a large role in the components of the demand side, the supply side of the silver market. So when you get a hit job coming out in this tax bill coming out, and it's whacking all the solar stocks, and silver futures are able to climb up above that, well, it tells you that silver is beating to its own drum here. So the technical analysis paints a completely different picture on the silver market. You have a bull flag, you got that pull of that breakout here really above 33.50. You get this consolidation where the last 6 days probably not seeing as much activity on a day-to-day intraday trading basis in the silver market amongst the client base because of the small ranges we've seen in the silver market. But what happens is you come into that point and then you start to get the breakout of the flagpole to the upside. And that's what silver did. So silver made a new contract high here recently, backing off just a little bit, up about 1.76%. Looks really good on the charts. That Citi report most likely has some bullish catalysts here for the silver market, as they also write about copper as well. Now, shifting gears really quickly to crude oil futures, up about 2% at 71.61. That has had just kind of a wild ride in the overnight market because the risks and the pressure facing that's Iran and Israel right now, the implication that if the Straits of Hormuz was to be shut down, we would most likely see 80, 90, and even triple-digit crude oil to the upside. Now, the risk of oil prices also pressures central banks where they can't cut interest rates, and it keeps them in a prolonged period of higher interest rates. So you were going to want to see some of the clues that Jerome Powell gives here tomorrow. Copper buyers are continuing to face a major squeeze on the London Metals Exchange due to the dwindling volume of the metal on the exchange's warehousing network. So the chart of the day that I'll be sending out will be the LME's inventories, and you can see that even the global inventories are really coming down at some of the lowest levels we haven't seen in quite a while. So the price of spot contracts are reaching a premium as much as $36 a ton. And I just had a client ask me, he said he went to one of the third-party websites where they have spot prices, and it was on the platinum market, and platinum spot was trading higher than the futures contracts. Well, the reason is that the farther out you go, you're going to get supply that comes back on the table, and maybe demand will start to normalize. While on the spot front, end users are struggling to get platinum at the moment, and there's just a surge in that demand. So we'll kind of want to watch the silver market and see if we see any of these premiums occur as well, where you start to get some of this really upward trajectory in the markets here. So the spot price premium reached $36 a ton, found the day's contract. So it's one of the widest spreads we've seen since 2021, indicating a shortage of metal in the exchange warehouse. So it's really 80% of the stockpiles here are really starting to fluctuate and move into U.S. ports, because you keep getting this reoccurring event where you have expectations for a 25% tariff to go in, and that's really the base case on a lot of these different metals, specifically the copper market. So if you get that, you're going to get the silver squeeze as well going on, and that's what's boosting prices, in my opinion, here in the overnight market. Look in the ETF flows, the exchange-traded funds added about 185,000 troy ounces of gold holdings in the previous session. They cut 1.56 million troy ounces of silver holdings in their session, and that was most likely because they were getting bored with the chart pattern there, so they rotated their money elsewhere. We saw platinum holdings decrease about 53,000 as well. Year-to-date percentage change, gold up 7.5%. That's an uptick of 0.3. Silver, a downtick of 0.2 to 5.8, and platinum, a big downtick of 1.6% up to 2.5. So that indicates to you how thinly traded the platinum ETF is. So it's platinum and palladium are really difficult when it comes to the ETF side. Futures contracts, the only issue is on the palladium. It's a big contract, 100-ounce contract, and platinum's a 50-ounce contract. So you could definitely expect your account to move significantly once that thing starts moving. So the gold-silver ratio dropping to about 91-1. So big 3-handle reduction here from yesterday. Remember, above 100 really occurs when there's market disruptions. And if you look at some of the outside markets, the dollar is up 11. All the foreign currencies are mostly lower except the Swiss franc. Your grains, agricultural products are in a big mixed picture right now. The energy market is supported by the conflicts going on in the Middle East here. And then would be interesting to see how, with silver up 2%, gold unchanged, copper slightly negative on the day, what's going to happen here with this silver market? Is it going to finally beat to its own drum here? We'll wait and see here as things will progress. So if you got any questions, you want to know some levels on some of these markets that we're looking at becoming involved with our clients. One of the markets here that reached a resistance point, became a bit overextended yesterday, was Bitcoin. Now coming back lower, down about 3.5% here, going back on sale in my opinion. So you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and options trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.